How 4 elite Massachusetts colleges skated by Trump's tax hike. Imagine a world where some of the wealthiest colleges in the United States are exempt from paying a significant tax, while others are left to foot the bill. This is the reality that has unfolded under President Donald Trump's big, beautiful bill, where 4 small private Massachusetts colleges, Amherst College, Smith College, Wellesley College, and Williams College, have dodged a major tax hike, potentially thanks to an unlikely ally in Hillsdale College, a conservative college in the Midwest. But here's where it gets interesting. Hillsdale College, despite its strong ties to the Trump administration and conservative politicians, was initially set to face an increased endowment tax, just like Harvard University. However, in a surprising turn of events, the final bill included an exemption for colleges with fewer than 3,000 tuition-paying students and more than 50% of those students from the U.S., a criteria that just so happens to apply to the 4 Massachusetts colleges. "We dodged a bullet," said Philip Levine, a professor of economics at Wellesley College. Smith College, for instance, narrowly escaped the hike with 2,857 total students enrolled in the 2024-2025 academic year. So, what happened behind the scenes? It appears that Hillsdale College's lobbying efforts may have played a role in the exemption. The college hired a lobbying firm, Williams & Jensen, for $50,000 to address specific threats to the institutional and financial independence of the college, primarily related to the higher education endowment tax. Hillsdale's president, Larry Ard, also penned an op-ed expressing his disdain for the proposed tax, arguing that it could harm the very independence of the institution. Meanwhile, other small private institutions, such as Williams College, Pomona College, and Claremont McKenna College, also hired lobbyists to fight against the tax. The endowment tax, which was established in 2017, applies to private colleges and universities with endowments of $500,000 or more per student. The wealthiest institutions like Harvard University could have seen a tax hike as high as 21%. However, the final bill sets a ceiling of 8% for universities with endowments of more than $2 million per student. The tax will cost MIT around 10% of its annual central budget, according to a letter from MIT administrators. The exemption for small private colleges has been seen as a welcome advancement by the 4 Massachusetts colleges. Smith College's spokesperson, Carolyn McDaniel, said the college is grateful to members of Congress for protecting small colleges from the endowment tax hike. Williams College also welcomed the news, describing it as an affirmation of the endowment's vital importance for small private colleges. But not everyone is pleased with the exemption. Congressman Troy Niels, or Texas, who proposed a bill to raise the tax on private universities' endowments, argues that elite universities need to be held accountable for their significant tuition increases. On the other hand, higher education leaders, such as Rob McCarran, president and CEO of the Association of Independent Colleges and Universities in Massachusetts, believe that the tax is unnecessary and ultimately harmful. "I would consider this a fairly punitive tax that is just attacking a certain segment of colleges and universities," McCarran said. "The debate raises important questions. Should there be an endowment tax in the first place? Do private colleges and universities provide enough benefit to the economy to justify their tax-exempt status? And what does this mean for the future of higher education in the United States? As we consider these questions, it's essential to weigh the pros and cons of the endowment tax and its impact on different institutions. What do you think? Should small private colleges be exempt from the endowment tax? Or is this a case of unfair treatment? Share your thoughts in the comments below. The One Big Beautiful Bill Act. Key amendments to private college endowment taxes. The One Big Beautiful Bill Act. A closer look at key changes to the excise tax on private college and university endowments. July 23, 2025. What's the real story behind the One Big Beautiful Bill Act? On July 4, 2025, President Donald Trump signed into law H.R. 1, also known as the One Big Beautiful Bill Act, BBB. This sweeping budget reconciliation bill introduces major changes to the excise tax on the net investment income of certain private college and university endowments, commonly referred to as the endowment tax. These amendments, codified under Section 496(8) of the Internal Revenue Code, could have significant implications for higher education institutions. Let's break down the key updates and what they mean for colleges and universities. The changes to the endowment tax will generally take effect for taxable years beginning after December the 31st, 2025. For institutions with a fiscal year ending on June 30th, this means the new rules will first apply to the tax year starting July 1, 2026. Until then, the current endowment tax rules remain in place. Which institutions are affected by the endowment tax? Law before the BBB. Previously, a private college or university was subject to the endowment tax if it met the definition of an applicable educational institution. This included institutions that 1. Had at least 500 tuition-paying students in the prior taxable year. 2. Had more than 50% of those students located in the U.S. 3. Held assets, excluding those used directly for educational purposes, with an aggregate fair market value of at least $500,000 per student. What's new under the BBB? The BBB retains a similar framework, but raises the threshold for the number of tuition-paying students. Now, a private college or university will only be subject to the endowment tax if 1. It had at least 3,000 tuition-paying students in the prior taxable year. 2. More than 50% of those students are located in the U.S. 3. It has a student-adjusted endowment of at least $500,000. This term is defined as the total fair market value of the institution's assets, excluding those used for exempt purposes, divided by the number of students. Notably, the BBB does not exempt religious institutions from the tax, a departure from earlier versions of the bill passed by the House of Representatives. Expert insight. By increasing the minimum student threshold from 500 to 3,000, the BBB effectively exempts many smaller institutions from the endowment tax starting in 2026. This change could provide significant relief to colleges.